Hey guys, invest in yourself, then invest in the markets. Start now by educating yourself on how markets work and find out what is right for you. Hello, again, welcome back to Laptop Trader channel on YouTube. My name is Philip, and I'll be hosting this presentation in August 2026. I'm here to share my trading experiences and give back to the stock trading community one video at a time. This channel is mainly for new traders or new investors, but all are welcome. My goal is to educate you, inform you, and get you up to speed and to keep you from losing money in trading and help you understand the markets from a technical view. I publish a monthly video which covers different current markets, stocks, and ETFs. Our education and information covers the stock market, how the market works, and how to create confidence in yourself by putting the odds in your favor and making the market work for you. If you wish to be updated when new videos are published, hit subscribe now. My email contact is laptoptraderphil@gmail.com for any questions. To share this channel, use @laptoptraderchannel on YouTube. This video is for information only. It should not be considered investing advice. Caution: trade at your own risk. Most stock day traders lose money. Please protect yourself at all times. Any stock suggestions are up to you to decide if that is appropriate for you. Good luck and God bless. So I have to switch something up here real quick because I had some problems with my slides. But here is our August agenda. Okay, I'm going to change up the format just a little bit. We're going to move the education to the second half of the video, and we will get right to the charts and some potential trades for this upcoming month, along with some market review and some trade review. Then we'll get to some education, maybe something about risk management. This month, we can have a further discussion of the space race, including SpaceX and Amazon. Also understanding supply and demand in the stock market. Okay, so we'll get to that later. As far as an educational topic, let's just get to some charts. Now this month, okay, I'm going to go bottom up. Okay, many times I've taught you guys you can go top down. Well, this time I'm going to go a little bit different. I'm going to go kind of in a bottom up direction where I'm going to start with some individual stocks. Okay, I'm just going to get to a watch list I have. This one is kind of has the theme of staples, consumer staples and food products, and it's just going to list different companies, and I don't think they're in any particular order. I can put them in order, but Coca-Cola here looks pretty good to me. The best buy point on this chart would have been through these two pivots back around the $74 or $75 area, but just made a new high in July, and it's kind of pulling back a little bit here in August, but still looks pretty good uptrend for Coke. Pepsi looks the opposite, more of a downtrend, bottoming pattern. Keurig Dr. Pepper, again, doesn't look very good. Hershey looked good here for a couple months back in January and February of this year, but then gave it all back. If that could recover and maybe get over this red bar at 193, I would consider a possibility in Hershey. McDonald's had a pretty good sell-off after this last earnings report. So, not this last earnings report, but the earnings report in February. Then we had another earnings report in May, and then a recent one in August. So we'll see if this could flip up if we get a buy setup or something over these two bars, something over probably 291. I would be more interested in McDonald's. Wendy's, really no interest, big downtrend. Yum Brands, I really don't have any interest there. Too many red bars. Starbucks, possibility. Big range of a chart, really, overall, right? We got a range in this chart from about 120 and the lower range around 73, $74. But we do have some tightening of price over the last 4 months. So I think if this could get going over, let's say, 109, yeah, I like Starbucks better over 109, but the target on Starbucks would only be somewhere in the 118 area. So not a whole lot of upside in Starbucks. That's in a downtrend. Monster still in a big uptrend, but recently had a big red bar there on earnings, so I don't like that. So nothing really super exciting in the staples industry. So let's look at some other industries. How about maybe oil? Let's take a look at oil. That's been a pretty hot topic this year. Sometimes I will organize these two by company size or market cap. Sometimes I'll also sort these by net income. That's another interesting way to sort stocks. But market cap wise, that shows us the largest companies at the top of the list. Generally, the money flows into the largest companies, but there can be opportunities in smaller companies too. But anyway, right now ExxonMobil had a big move up, made a pivot, pulled back for 3 months, and now it's kind of flipped up in July. So I like Exxon over this July candle over 159.07. I like Exxon. CVX, I like that over that July candle too, over 197, 198. You have a high point here, which would be a first target, and then above that you would have some blue skies for Chevron. Shell also kind of trading near its highs. That looks okay. ConocoPhillips, possible buy set up there if that gets going over this July candle. So it looks like July was a pretty good month for oil, these oil companies, but they could pull back here in August. So that would just be kind of a watch. Enbridge looked pretty good, and then it sold off recently. Quanta Power, if that could get above this candle here again in July, above 688 or 689, that would look better. Duke Energy, yeah, just kind of everything in this oil sector is kind of pulled back here over the last few months, so nothing super exciting there either. How about we look at payments? Let's take a look at this payments industry, and we can sort that by, so let's sort it a different way. Let's sort this by performance. Here's a sort I like to use also. I'll create a list of stocks in an industry, and then I'll go to performance, and then many times I like to sort it by performance. So I just use a 1 month change. There's 3 month change. Some traders like to use a 5-day change. I like 1 month for my trading plan and my trading style. But this will oftentimes get me in the ballpark of something that I like, or that looks good to me. So this had a big double bottom, big bottoming pattern, big base, whatever you want to call it. It's been up over here over the last 2 months pretty significantly, up over 30% in July, and already in August up 31% on earnings. So I like that. I don't like that it has this gap down here, and that gap kind of matches the top of this pivot. So that would kind of be your upside. Where it's at now is 214.94. That high target, or that first target, would be about 262.5. However, if it gets going above that, it's got some other areas up here to test. So that does have some white space on the chart for Paycom. That looks okay. PaySign I do own. I've been in this for, I think, a month to 8 weeks, somewhere in there. But this just had kind of this blow-off candle, or this igniting candle. I believe I took half. I took a half a position off, or I took half off in profits. I'm going to try to hold the rest. If it pulls back, it's going to stop me out. So that's where we're at with that one. That's one I do own. PayPal is still in a long-term bottoming trend. Paylocity is possibly coming out of a bottoming trend. Bill Holdings still in a bottoming trend. Paychex, I like that had that recovery, then had this igniting candle, and then this is kind of inside. If that stays inside, that top 20-30% of that candle, I like that as a buying opportunity to go higher, or a continuation higher. That has some nice target points on there, at 128. You got another target area up here on 140. and this high point at 162. So that has some white space in there too for Paychex as a possible trade. Capital One, I like that for that to come up here and test these highs. So this area looks a little bit more promising to me. MasterCard, no. EverTech, no. And Synchrony, yeah, that's a possibility. I like that green, red, green, then a bottoming tail candle. Then this is trading above that. I like that to go from where it's at and test these highs on that 89.90 area. So there's a few ideas for you guys there in the payments space. Let's look at some other stuff so I don't get too long-winded. Let's just take a look real quick at our top, what I call the Super 8 stocks, right? Microsoft, Amazon, Google, Nvidia, Meta, Netflix, Tesla, Apple, and I throw in Bitcoin in there too. So let's get to that. This we don't really need to sort. These are all pretty large companies, except for Bitcoin. So Microsoft had a pretty bad year so far. Sold off. Started to recover in April, May. Sold off pretty hard in June. And had a real nice recovery in July, right? What we call a 180 reversal bar or a reversal candle. And now it gapped up and is holding that area right now. It closed this week at $499.99, just under $500. So I like Microsoft over 500 to go back up and test the highs at 5.5 to 600. Amazon making new highs this month. That looks great. Google trading up near its highs. It had a little bit of some corrective price action there through price and time, but I like that over this high here of 384.5. Nvidia is looking pretty good, right? As far as the leader of the market, that looks pretty good. Nice green candle there so far in August. Meta does not look as good, trading near 3-year average lows. So I don't like that as much unless it turns around in a strong way. Netflix pretty weak, unless this becomes a turnaround opportunity, right? If this candle was to form, move up in a significant way and trade over this candle in June. I think otherwise this does look lower, or at least for the moment being, not going higher. So Netflix pretty weak. Tesla also very weak after this last earnings report. I don't like that when stocks sell off on earnings. So that looks pretty negative for Tesla. Apple looks great. Had a kind of this range expansion candle in July after red candle in June. Looks like so far it's holding that area. So I'd like that to move up back and test those highs in Apple. Bitcoin still looks pretty weak, trading below 3-year averages. I don't trade Bitcoin anyway, but that's just my comment on Bitcoin. It looks pretty weak. And SpaceX, the big gorilla in the room, the company that is more valuable than most companies in the world, but doesn't make money. So that's interesting to me. I am personally not trading SpaceX for that reason, because I'm going to let this play out and just see where it goes. And where it goes, nobody knows. But that is not loading up right now, so we'll have to cancel that. But yeah, that's my comment on SpaceX. I would watch and wait SpaceX. That is where I'm at with that one. Let's take a look at maybe software. That's an interesting area sometimes. Let's take a look at software. I'll just sort that real quick by company size. And we'll just click market cap, and that gives us our top software companies from top to bottom. So I've already commented on Apple, already commented on Microsoft. Cisco, if that'll pop up, was the next one. So Cisco had this igniting move April and May. That's huge. And now it's kind of holding this area up here. Great company, really extended. I know there's some news stories out there about Cisco has a large debt load. So I would not trade that at this time. Palantir is another big name in the industry. And this is why I hate doing live feeds on my videos, because it takes, sometimes we have some internet issues. But that looks pretty good. That had nice bicep up there in Palantir. Big igniting bar here in August. So I like that so far, right? We're just in the end of the first week in August. That thing is ripped up 39% on earnings. I like that. Above that, to go up and test the highs over 215. Dell Computer, pretty extended up. No thanks. Sorry, I had to get a drink anyway. All right, so we're having issues here, tech issues. Let's see if this will pop up. Anyway, you guys will have to look at software for yourself, because that is not cooperating at this time. I'm going to try to look at a few more industries, and then we'll get to some more education. But so far, I've liked, staples, we didn't see much. Oil looked okay. Our Super 8 stocks, that was kind of a mixed bag. Some were strong, some were weak. Then we tried to take a look at software. That didn't help. Let's take a look at a few more here. How about e-commerce? Let's take a look at e-commerce real quick. So we can sort that real quick by, let's just sort that by a 1 month change and see what that pops up. Okay, GCT. I like that initially. So we got our initial IPO pivot right up here. We had the IPO open at 1920, then it sold off. Went to stage 1, came up and tested this area, and that created a pivot. And then we created this other pivot, and now we're trading above all that on this, these last 2 bars. So I like that to go higher and test the all-time highs for GigaCloud, GCT. So that looks positive. Shopify, nice igniting candle here this month at Shopify. I like the company. I like that to go test the highs. One thing I do too is, before I ever take a trade, I'll start looking at different time frames too. So right now I'm just giving you a quick overhead view on a monthly chart, but let's take a look at a daily chart of Shopify. And here you have what I would call a buyable gap. Right, we had this big base, create a pivot here, we create all these pivots, and then on earnings we gap up into earnings. And we've held that area now for 3 days. So I like Shopify to continue to trade higher. And when I look for a target, I'll look out these monthly charts, and we've got a couple targets. We could use the top of this as a target, 170.9. Close this Friday at 151.57, and then we can use the all-time highs as another target, right? So 182. So that's pretty good upside from 151 and change up to over 182. So I like that as a possible opportunity there. Airbnb, nice igniting candle there. That looks good. Vroom, I don't like that. That's still on a downtrend. Target Corp actually looks pretty good. We had kind of this cup and handle type of deal. I like that. Upside potential over 191 and Target. What else we got? Here is Wayfair. So that a nice move up, create a pivot, move back down, kind of creating this opportunity here. I like that because there's a lot of white space up here too for Wayfair. So, initial target could be 114, 115 from 106. And then above that, it's anybody's guess, but that looks pretty good. So let's stop there. You guys could look at some of these other things for yourself. I just want to give you a quick overhead view of what I'm seeing in the markets as far as individual stocks. We'll look at one more group, and I'm going to choose, how about the gig economy? Let's take a look at what's going on with the gig economy, right? This has been a big talking point for several years, right? The effect on workers, big tech getting rich on the back of, working people or poor people. And I think there's some truth to that. But we'll just quickly sort this by market cap. Interestingly, in this gig economy, these companies are making money. So when they say, "Oh, we can't afford to do this or do that," well, Uber had net income of over $10 billion. That's a lot of money. Carvana over $1.4 billion in net income. Zoom over 1.9 billion in net profits. So these companies are doing pretty good. So I don't feel sorry for them. So Uber has been in a downtrend since October of last year. Looks like it's coming into the space, possibly turning up. I do own a small position in Uber right now, as the potential to move from where it's at 75 back up to this 99 or $100 area. So I am trading Uber right now to try to play that. DoorDash, also similar pattern, looks pretty good. Carvana is a little bit weaker, although it does have this buy setup here, this 2-year moving average. That's a possibility. I would say over 73.55 in Carvana. Zoom, I do currently own a position in Zoom because I like the company. It seems to have stuck with workers and with companies and in the economy in general. It's already up 8% this month, and it was up 11% last month. So I like Zoom going forward. Grab company. Yeah, I don't think there's anything more frustrating than internet connection issues. We had some storms last night. But yeah, I don't like that right now. I'd like this way more over this pivot here, over 5.5. And I also would like it over this area, over 6.5. And then we have some white space up here. But bottoming pattern, trades a lot of volume. So we'll see where that goes. That could ignite at any time. But that's a watch. Instacart, I like that. Kind of trading up here towards its highs. So I like that one. Lyft, also pretty profitable, but nowhere near the size of Uber. Uber is the dominant force in rideshare delivery and the gig economy in general. But Lyft does pretty good too. I like Lyft. No hate on Lyft. And they do make money. So I like Lyft as it moves up and gets over this pivot. And then above that pivot over 25.54, we have some blue skies up there if that gets going. And I can tell you if Fiverr doesn't pop up, no on Fiverr. Fiverr just made new lows last month. So Fiverr is in a very long-term stage 1 base. So no thanks on Fiverr. All right. I think that's enough of individual stocks. I hope that gives you a sense of what's going on in the market with individual stocks. If that doesn't make sense to you, then maybe watch my other videos or keep watching, right? Because I'm going to keep going over different ideas and concepts to find some good trading ideas. So I think I gave you a few there. Let's get to our main ETF list where I cover the general markets, right? The general indexes. And this is sort of just by Bitcoin, S&P 500, NASDAQ, Russell 2000, Dow Industrials, and the transports in that order. And this just shows us, kind of what's going on with these different markets. So again, Bitcoin, I've already commented on, looks quite weak. It's bounced a little bit, but not enough. Certainly not enough for me to trade if I did trade it. But the SPY is making new highs, and right now is pretty bullish, right? There's blue skies for the SPY. So that's bullish for the moment. Qs are also bullish for the moment. They had some weakness over the last 2 months, but it looks like that has reversed for the time being. IWM, which is a smaller cap index, pretty extended up from the moving averages, but still bullish, still making new highs this month. Dow Jones Diamond ETF, just pretty steady Eddie uptrend, new highs this month, so that's bullish. And we've got transports which looked pretty good, and then they sold off in March, then reversed, and since that time have remained pretty bullish. New high last month, even though that's a red candle. Green candle so far this month, so that still looks bullish for transports. And the reason I cover these indexes is because if there's a market environment where we have a generally bullish environment, that usually is good for stocks to trade. If you want to trade stocks for profits as they, increase in value. Now, if it was a bearish environment, that would be a bad environment to try to trade stocks and go long. But we also have some other indicators that we're still in a pretty bullish environment, and that next indicator is the VIX, or the volatility index. So this is still down here below 15, just hanging down here. That's going to take probably, either some major market sell-off to change that, or some sort of national or geopolitical news to change that, to get that volatility higher, right? Fear. Think of fear when you think of volatility. Right now, low fear, again, signifying a good environment for trading stocks. And it's pretty much the same picture for mid-cap index that I watch, symbol MDY. And you'll just have to take my word for it because I don't like keeping you guys in suspense. But there's also a small cap index that I watch, SPSM, right? Trading near all-time highs, so that's pretty bullish. And then I usually cover our 11 major sectors, starting with energy, XLE. Looks fairly bullish, I would say. This had kind of the sell-off over 3 months and then reverse course in July. If that continues above that July candle, I would say bullish. If this retraces, more than 40 or 50% into this July candle, that would be bearish for energy in general. Financials made new highs in July and continuing higher in August. So financial sector stocks look bullish at this time. Consumer discretionary. This has been kind of back and forth in more of a range. Now it is trading near that short-term moving average, 12-month moving average, but this bottoming tail, I like that. That says sellers tried to sell, but buyers said no. And there was enough demand to push that back up, and now we've got a green candle starting in August. So I like that for consumer discretionary stocks and retail in general. For consumers, that looks positive. Healthcare has been positive over the last 3 or 4 months and continuing, made a new high last month. So I like the healthcare sector. Technology continues to be a leader, so that looks pretty good. Utilities, that looks a lot weaker, trading below that short-term moving average now. Pretty clear downtrend here over the last 6 months, so I would say no to utilities. Industrials, very similar to the Dow Jones index, making new highs this month, so I like industrial stocks. XLB is the materials sector, things like plastics, chemicals, different materials that we use every day, and companies that make those. Yeah, it's frustrating. I don't know if that's my internet or this platform. Could be either one, but we're not going to let this go on for too much longer, that's for sure. Well, I wanted to get to interest rates because there is something going on in the background. I'm sure you realize it, just in the fact that your paycheck probably doesn't go as far. Interest rates, have been ticking up over the last 5-6 months, right? 6 months ago they were at, 8 months ago they were at 357. This month they closed at 371. So that's just a slight uptick in interest rates, which signifies what? Inflation, right? So our money, as interest rates go up, our money becomes less valuable. And this shows more clearly in the 10-year Treasury note chart, TNX, right? So you can see here, up since March of this year, we're closed at 431, and this month or this week it closed at 466. Well, that's going to affect interest rates and borrowing costs for borrowers, especially with large items like cars and homes. So right now, according to Bankrate, national average fixed rate mortgage for 30 years, 6.76%. So that is going to affect people's ability to make mortgage payments if those continue to tick up. So that is one thing I watch, that can affect a whole lot of things in the economy, and it can affect the stock market. So right now, everything looks like it's firing on most cylinders, right, with these new highs in these markets. But like I said, geopolitical issues and other general economic issues can drag stocks down. So the message there is protect yourself at all times. So that concludes our market review and the charts. I'm now going to get into a little bit of education about supply and demand. This is very easy to understand. This is a simplistic explanation of the market, but it does apply. Again, the market's very dynamic and things change all the time. But if you can relate to or understand this story, then you can understand the stock market. So someone I know was working during Black Friday at a toy retail store, and some items were expected to be top sellers. Two of those items were the Furby talking animal toy and the Nintendo Game Boy with the black and white screen portable video game. According to reports, people were very enthusiastic and in some cases even fighting for the Furbies, while the Game Boy system did not sell very well at all. Both were expected to sell, but one did and one did not perform well. Well, the same is true for any market or individual stock. Some sell and some do not. And we can see this on the charts and in news reports for any given time period. To reinforce this point, a funny movie to watch on human behavior and emotion is Jingle All the Way with Arnold Schwarzenegger. Well, the stock market still works on emotion and desire and supply and demand. In the same way as a hot new product sells quickly, stocks are the same way. As recently there was great hype and emotion around the SpaceX IPO where the public could buy a piece of SpaceX. So that was a very popular event in the stock market. And we saw some real enthusiasm for that event. So anyway, I think that is enough for this month. Understanding supply and demand. Let me take a look if there's any other slides I want to share with you guys here. No. Here's something else about the stock market. If you can internalize this too, not always easy, but it sounds simple, but you need to win more than you lose if you're going to trade individual stocks, right? If you can internalize this with the next exercise, then you can succeed in trading over time, despite your income or your account size or where you're from or any other excuse. The only way this won't work is if you lose more money than you win, and if your ego is so big, you just won't try this exercise for yourself. But I put this out last month. I'll just probably end this video here. But in this study, we used a $1,000 account size and a 10% position size with a $10 stop loss or a 1% stop. We used a 2-to-1 win-loss ratio, or win 20 and lose 10 over a series of trades. At the end of the exercise, we are up $200 in total, or up 20% for the account over 4 months. We did not increase our risk or our reward. We went about trading in a methodical, calculated way and beat the market. 20% beats the market in most years. In real dollars, we only made $200, but for the newer small trader, this is huge for their thought process and their psychology and protects their account from catastrophic loss. Now I know there will be gaps up and down, but by keeping our position size smaller, it should still be a worst case scenario of a 10% loss if a stock goes to zero or out of business even. I encourage you to do this study for yourself with your account size and internalize how to put the odds in your favor. Okay, so in this example study, we only won 27 out of 58 trades. So we only had about a 50% win ratio. Yet we still made money and we still grew our account about 20% overall. So I think that's a valid way to go about trading. Think about it. Put some numbers to your trading plan for yourself and see what you come up with. Okay, so we'll just fast forward down here to the end of our slides. There is our ending slide. Again, I apologize, guys. I've been having trouble with connectivity and with Google for some reason too. But I do want to say, in closing, thank you for liking, sharing, and subscribing to this channel. And best of luck to you in your trading. And I'll see you next month. If you have any questions between now and then, my email is laptoptraderphil@gmail.com. And you can find us on @laptoptrader on YouTube. Thank you. Goodbye. See you next month.